when you talk about saving for retirement, and people like you in the financial services sector, and you hear of rates such as NSSF, just picking off where James is coming from, do you agree or disagree, or how do you rate that move by NSSF to just spike pension rates?
Thank you very much, Karanja, for having me at the studio this morning. NSSF has a fundamental role to play in the country in as far as provision for retirement is concerned. Yeah. And now security in retirement is very important, because what you want during retirement is to make sure that our standard of living does not go down. So social security is one of the key pillars of retirement, providing pensions during retirement. The other pillars are private pension schemes are provided by various occupational pension scheme. So the move by NSSF, our understanding, is to address one of the key problems that we have in retirement, and that is security, i.e. you get people retiring and they don't have adequate pensions over retirement. So effectively increasing the contributions is to ensure that during retirement members have sufficient income to continue the standard of living and to address a big problem in retirement, which is poverty. Now, what they've also done is they've come up with something called contracting out. In other words, if you already have an existing occupational pension scheme, you can be able to contract out, i.e. The additional contributions below a certain minimum can be channeled to that occupational pension scheme. And we think this will provide members who are in occupational pension scheme with an option to ensure that they continue providing those contributions to those schemes. So I think the move is welcome, and I think it's very good to have debate around security, around social security, and more importantly around security during retirement, because retirement seems very far, but I can tell you the years go by, and it's important that we prepare adequately.
It dawns on you that yes, today, no more employment, you have to start living, and then by that time inflation has already set in, and there's nothing for you to have in the bank. But moving away from NSSF and that whole debate of social security, UAP is in the market looking for a corporate bond, 2 billion shillings.
Yes.
How is that going?
It's going very well. It's going very well. And maybe what I can do is I can just start by introducing UAP. I think the question is, did we move away from insurance? We haven't moved away from insurance. Insurance is our core business at UAP, and it will always continue to be our core business. What the group has done over the last 5 years is that they've consciously decided to play in a wider space, and this is the space of financial services. So we've redefined the vision of the group. And the vision of the group is to be the most innovative, the most revolutionary financial services group in Africa. So in terms of our business focus is broadly two-line, that is protection and investments. So we provide insurance services across 3 key business areas, that is general insurance, life insurance, and medical insurance. We also provide investment management services and property development and investments. So effectively, we're a financial services group, and what we'd like to do is to ensure that our clients can be able to see us as a one-stop shop. If they need protection, solutions against their assets, against their life, against their health, they can consider UAP. If they need investment solutions to make sure that they have adequate savings for retirement, to make sure that they're able to manage their extra savings carefully, they can consider UAP.
Coming back to the 2 billion shillings, now what does that do for UAP as a group?
Yeah, sorry, and I didn't address the question. Now, in terms of coming to the market, now, as a group, UAP is a large group. Currently operating in 6 countries in sub-Saharan Africa. We have over 12 operating subsidiaries. We service a market of a population of 200 million in the 6 countries. The group has assets in excess of 35 billion, with about 600 employees and about 1,500 financial advisors. So we're a large group. So we are growing, and as we grow, we do have needs for capital. Now, in terms of how do we raise capital, the various options that we consider. And what we try to do from a treasury management perspective is to make sure that we approach the most prudent, if you like, solution on raising capital. So you raise capital in 2 ways. You can get equity from shareholders. We're already fully funded from the equity perspective. If you recall, about 2 years ago, we brought on board a group of private equity investors who provided the group with substantial capital infusion. The other option of raising capital is debt. You get debt. And debt, you can either go to capital markets or you go to a bank, right? So right now the balance sheet of UAP is debt-free, and we decided after careful analysis that going to the capital markets through a debt offering is the most optimal course of action. So what that means is that we're offering a very interesting opportunity for investors out there who wants to invest in a debt instrument, in a corporate bond, to consider investing in UAP corporate bond. Now, the corporate bond is a short-term bond. It's 2 billion. 2 billion is definitely a small size. We do not want to
be heavily indebted as well.
Be heavily indebted, but we, in terms of our plans on executing our strategic plan, I think probably in the next year or so, we might be going again in the capital markets. So the size is 2 billion. It's going to open next Monday, period of 2 weeks. It's a 5-year tenure. And we'll be releasing information about the rates today, but we think it'll be between 12.75 and 13%. So it's very, very attractive. So I think the message out there is this is a fantastic opportunity to consider investing in a solid group. UAP is solid group. It's got a solid balance sheet. It's backed by key shareholders. We're a public company with about 950 shareholders, and we think this is a fantastic opportunity. The minimum investment amount is 100,000. So individuals and corporates can invest. We've seen a very, very strong demand, and we're very hopeful that within the 2 weeks we should be able to raise the 2 billion that we're seeking.
Yes, it's coming right after the much debated and much talked about Eurobond. So are you likely seeing success as well?
Yes, I think in terms of the assessment of the market that we've done together with our financial advisors, I think is very positive. There is sufficient liquidity. There is substantial investments in the market that is looking to a home. I think the key issues around corporate debt is the quality of the issuer. So I think what people need to consider basically two things: the quality of the issuer and the instrument itself. So in the case of the UAP corporate bond, the question is, what is the quality of the issue? And our view is, I think UAP is a very strong financial services group with Pan-African ambitions. Right now we are regional in 6 countries. We shall be generating very strong earnings going forward in line with our strategy. We've got a strong team that is executing the strategy very efficiently, and we think this is a fantastic opportunity to participate. So we remain very optimistic that we should be able to